Yeah, hey, hello everyone. I think I'm audible. I'll just check. Yeah, I think I am. So, if you can hear my voice, just type in the comments that you can hear it, and then we'll wait for a minute more, and after that, we'll get started so that if anybody else wants to join, they can. Yeah, hello, good morning, Sanjay ji. Good morning. Yeah, so let's get started. I have received a few questions. So, what we will do is we will go from very basic to uh, slightly complicated questions. So, the first question, I'll open the list of questions as well. Yeah. So, the first question that I got is I just purchased a plan how to start using Sharply. So, now it depends on what type of data points that are you using, right? So what I would do is first step to start generating or getting better returns, how to move in that direction is first to analyze your portfolio, right? And once you have your portfolio analyzed, you will be able to find the gaps. Then start working on those gaps. So for that we have something called wealth view to analyze your portfolio. So I have logged in into a different account, so anything is not connected as of now. But what you need to do is you connect your mutual fund portfolio or stocks or ETF portfolio, uh, whatever. So you will have the option to connect all of your accounts, some of your accounts, and then analyze and do a lot of things with it. On our YouTube channel, I have put a separate video on how to analyze all the data points and everything. For mutual funds, rolling returns, beat percentage, that types of metrics are really useful. And for stocks, another useful metric is overlap as well. So you analyze all that. Then the second step you should do is create a dashboard for yourself for all the important data points that you use, right? So to create a new dashboard, this was also one of the question, like how to use this thing, because it comes out as blank, right? But you give a name that terminal underscore one, you select an icon of your choice, and then you have pre-built terminals as well, or else you can start from the scratch. So to create a pre-built terminal, you have five terminals with you, right? So let's say if you are a passive investor, so based on the investing personas we have created this. So if you are like a intraday trader, then you can clone this one, or passive investor, I'll click this one. So you have your terminal ready, or else what you can do is you can create another terminal and then do everything by yourself. So start building from scratch. Now here you have the widgets as per the category, right? So you add something, let's say you add a market watch. So this is the market watch widget. You can increase, decrease the size of it, right? Then near 52-week high, if you want to add, you can add that. Then from technical, you want to add chart window, so you can add a chart window. This is too small, so you can play around with it. You can move the position of it as well. So chart will be here. Then some stock specific, you have certain metric uh, of stocks you want to analyze quickly, right? So you can do like this. You can add multiple widgets in the bottom as well, and then you click on save, and you have another terminal ready. Now let's say you want to quickly analyze important metrics of, and also you can decide the metrics as well. So right now here are the metrics, you can change them by clicking here. You can add, we have 400 plus metrics, so you can add them. You can change the stock. So rather than Reliance, I can analyze of HDFC Bank. So as you can see now, I have the HDFC Bank's metrics. And so basically you start with wealth view, then you go to terminal, then you create your first screen, then factor model, then you create your first strategy, and so on. So that's how you start using Sharply. Another question is how you okay, how is factor model different from screener? Yeah, so factor model is in a way, screener has, I think, two main limitation. First is screener has the issue of edge case. So if you select, let's say, a stock with ROE greater than 20, right? So ROE, a stock with ROE of 19.8 won't be in your screener, but it can be a good stock. Like you have six conditions, but if it is not meeting one of them, then it won't come into the screener. But it can be a good stock. And another is that issue of weightage. So in screener, you write five conditions. Then what happens is each condition will get equal weightage, right? So if I write something like this, that PE less than 30 and ROE greater than 20 and 1 year return greater than 15, right? So now what happens is all three conditions here will get equal weightage. And let's say you are a momentum based investor, right? So what you would like to do is you would like to give 60% weighted to this condition and then 2020 to this. In screener it's not possible, but in factor model you can do it. So factor model is like a slightly advanced version of what you can do in the screen. So we have three metric here: PE, ROE, and 1 year return. You can do the same in factor model as well. So you create a factor model, then you add factors. So we will add the same factors: PE, uh, then ROE, and then 1 year return. So return, right? And now you have the ability to first select the direction as well. So PE, in terms of PE, lower the better would be the case. For ROE, higher the better would be the case. For 1 year return, higher the better would be the case. And then you can select where do you want to check it. So across the universe we have Nifty 500. So what we'll do is we will analyze for Nifty 500, and then you can, if you are a momentum based investor, then for quality and value you will give 20% weightage, and 60% weightage would be given to your 1 year return, right? And then you run the model. Now as you see, these are the stocks that you are getting because you are primarily focused on momentum, right? So these are the stocks: National Aluminum, just remember the name. So National Aluminum, Force Motors, and Autumn Investment, Muthoot, Vedanta, Indian Banks, Hindustan Zinc. Now let's say you are a value driven investor, right? So rather than giving 60% weighted to momentum, you give 60% weighted to valuation related metric. And then you change here as well. So 10% here and 30% to 1 year, right? So then again, if you run the model, uh, so yeah, now you can see the metrics have changed, right? So Union Bank was not there, Canara Bank was not there, BPCL was not there. So these stocks came up, right? So and then you won't be investing in all 500 names. So you can limit to 20, and then top 20 stocks will be there. So that's how factor model is an advanced version. If you have not used it, I would request you to use it, because this avoids both those, the issue of edge case, because right now we are not adding any absolute conditions, and you can also avoid the issue of equal weightage. And on top of that, what you can do is you have this specific filter here. So if you have any absolute condition, you can write that as well. So let's say we have given ROE only 10% weightage, right? But you have a bare minimum of, let's say, ROE TTM should be at least greater than 10%, or 15% is your criteria, even though you are giving just 10% weighted to it, but you have this hard condition as well. So you can add this and click, and then if the stocks with ROE less than 15% will get eliminated from this, right? So you can create a screener on top of a factor model as well, right? So that is the second part. Third part is, the next question was from that, how to perform multi-asset backtest. Now, multi-asset backtest is not available as of now. So, what I get from this question is that you wanted to add stocks, mutual funds, ETF, everything in one basket, and then create a multi uh, asset backtest. For now, it's not available, right? So, if you see, instrument is coming soon. So, as of now, it's not available. Then another question is, what is the maximum backtest window or period available? For that, I think for pro plan, it's 10 years. For black, it's 15 years. You can check as well. So go to this, you back test. Yeah, backtest data range. For pro users, it's 10 years. For black users, it's 15 years. Right. So that's the how to backtest ETFs from the custom watch lists. I think we have the option to add ETFs from the custom watch list as well. So you go to ETF. Yeah, you have the option here to add from the watch list. So right now I don't have any watch list, but let's say if I create one, and then I can create a watch list. Let's say ETF watch list I'll create. So ETF watch, I'll give it the name. Then you add ETFs. Now you also have the option to import ETFs as well. So if you have, let's say, an Excel sheet or doc, you can like import from that as well, right? Or else you can manually add the ETFs. So like right now I'll add a bunch of ETFs manually. So right, so I have added this many, six ETFs are there. Right now from strategies you have the option to, if you choose ETF, you have option to add from ETF. Right, so this is your watch list. You can select and add. So that's how you add from your ETF custom watch list. Now, is there a feature to eliminate stocks that hit upper circuit above a certain threshold in a given time? Yeah, yes, it's a bit complicated. So uh, what I'll do is show you the way of doing it. If you want the exact screener from our end, what I'll request you, whoever is raised this request, is raise again. Raise this request again in the community. So in community, you have the option to start a discussion. You can start a discussion and raise this exact request. Then we'll be able to share the exact screen. But you have the option here. If you know the circuit limit, let's say, automatically we don't store all the circuit limits for all the stocks. So if a circuit limit is, there will be circuit limit for different stocks, right? So different circuit limits, 5%, 10%, and so on. So if you know it exactly, then you can hear that circuit. So let's say you create a custom metric. So circuit underscore day, and then if you know that circuit is 5%, then one day return is equal to 5%, right? And this will be a boolean metric, so either 1 or 0. And if you see for these stocks, 5% return was not there, so it will be 0. But for stocks with 5% return, it will be 1. And then what you can do is you can we have a function called time series sum, right? So you can use this. You want to do the analysis of last 20 days. So what you want to do is, let's say you want to avoid stocks that have got this 5% circuit limit at least 10 days or 5 days from this 20-day period. So this circuit remember this is a boolean matrix, so you select circuit there. Now it will, what it will do is it will add, it will create the sum of it. So let's say for past 20 days, if the stock hit the circuit for 5 days, then it will have 5 instances of 1 and 15 instances of 0. So the value of this will be 5, right? So it should be lesser than 5, and then this is the condition to avoid the stocks with 5%. So this is the way, right? So then you have these stocks in which there was no like circuit, no circuits as of now, right? So these are the stocks in which in last 20 days the time of the circuit hit is less than 5. So that's how you do it. Another is how to rebalance stocks based on ranking system instead of full rebalance. Full rebalance is quite complicated to understand. So, full rebalance based on, I think, scores. I didn't get it, but if you create a strategy based on a factor model, your stocks will be like rebalance based on scores only, right? So if you create a strategy and you have option here to mm, yeah, stocks. So what I'll do is using screen factor model, yes. So then you create a factor of your own. Then in rebalancing, what will happen is you are selecting top 20 stocks based on the aggregate scores, right? So if I add factor, let's say enterprise value, then momentum, 1 month return. So this is my factors. Now if you use stocks, this is the score that each stock is getting from your universe, right? And then if you move to the next step, you have the maximum number of stocks, minimum number of stocks, you can select that as well. And then this, by this way you are rebalancing your portfolio based on scores. So I hope that answers this question. If there is something else, you can write us in the community, or else you can post it in the comment section as well. So right now I'm taking the questions from the form. I'll also look at the questions from YouTube comments as well. So I think that answers the question. Full rebalance, basically rebalance happens when your conditions are not met. So let's say you are doing monthly rebalancing, then what happens is at each month, at the end of each month, or whatever rebalancing date you have selected, on that day the conditions are run again. So and then we will check that from your current holdings which of the stocks are not meeting the entry criteria. If they are not meeting the entry criteria, then they will be removed, or else you can have an exit model as well, right? So here you have the option to define exit model, so you can do based on that as well, right? Then instead of evaluating lump sum rotation in the back test, how can SIP based performance? So I think this is for the mutual funds, SIP based performance. So right now we don't have the functionality of having a mutual fund based basket, right? So just a moment. Yeah. So what happens is, let's say if you add a bunch of mutual funds. Right now, SIP based entries are like not there. But for each mutual fund, what we have is SIP based calculator. So for any fund, if you want to check the back tested return from the SIP, so let's say Parik Flexicap fund. If I open this and go to the calculators, here I have the option to check SIP based performance. So let's say my SIP is, it's a 4,000 per month. This is my time frame. I will annually. You have also the option to annually step up. So let's say you will be stepping up 10% a year. Right. So then from 2013, like 28th May 2013 till now, your invested amount is like 11 lakh 26,000, and your current amount is 34 lakhs, right? So this is like SIP based back testing for a mutual specific mutual fund, and you also have the option to select direct and regular. So in direct you have 34 lakh 5,000, 34 lakh 2,000, and in regular you have 32 lakh 16,000. So on the face of it, there is a very small difference between direct and regular. So expense ratio in regular would be slightly higher, but in a longer term, like if you analyze for 13 years, you have what, 3 4 lakhs worth of difference. So direct and regular, another good point to have in mind. So this answers that question. But for a basket of mutual funds, we don't have this kind of arrangement as of now, right? And on this note, I would also encourage you to use this as well. So while selecting any mutual fund, rather than checking just the returns, you should check this thing is very important, rolling returns, right? And we have made a video around it. Even the CEO of Edelweiss Mutual Fund, Mrs. Radhika Gupta, is also very, staunch about, or like she is, you know, asking people to use these data points more, because it gives you the consistency of the fund. Just looking at the period returns can be deceiving. Let's say if you uh, like sort stocks based on 3 year return, what happens is if a stock has performed if a mutual fund has performed really well in let's say a 6 month window in that whole 3 year, but for the other 2.5 years it has been lagging, then what will happen is, just because of that 6 month return period, your returns will look good, right? But that's not the case in if you do the SIP in a mutual fund, because you will be putting your money at a different intervals. So for that you need to analyze this rolling returns. uh, if you have any doubt regarding this, how to use this, you can raise this in the community. We have also made a video around it, a Twitter thread around it as well. So if you don't follow us on X, you can follow on X as well. Alright, so that covers that. Then not able. I think we got this one is not able to create strategy. Already sent a mail. We have one of the team member called you. So I think we got on a call who has raised that question, right? So these are the questions from the form that we have sent. Now I want my MF to be better than benchmark and better than category average against all parameters. How do I use Sharply tool? Mm, so better than, like, one or two tools that I would suggest to use is, first is you connect your portfolio to the wealth. You check if there is any like large overlapping between any of your existing holdings, right? So what it will look like, I can show you that for your in the wealth you will be able to see that right now I have not connected any portfolio, so I'm showing you here. But let's say uh, I take some flexi cap funds, right? So NJUTIDSP. So you will have different sort of funds, but what happens is there can be a large overlap between your large cap fund and flexi cap fund, right? So if let's say 40 50% overlap between your flexi cap fund and large cap fund, then you might change your large cap fund as well. That way you will be able to diversify. So this kind of graph you will be able to see for all your holdings as well, right? So that's how you check. First part is you to check if you are holding funds with large overlaps. If you are, then you can reduce that to increase your portfolio return. Second part is we have something called alpha analysis, right? So alpha analysis, what you can check is alpha generated in a particular time frame based on any benchmark. So let's say you are holding small cap funds, right? So Let's assume you're holding small cap funds, then you select that category. Benchmark would be, in our case, now it becomes small cap 250 TRI, right? And then what you can do is like find do the alpha analysis. So let's say we do it for a 3-year period, right? So from 2023 to 2026. And yeah, these are the funds with highest alpha. So you have this beta value that's like with respect to benchmark, how much, like how volatile is your fund, right? So all these funds are lesser volatile compared to the benchmark and generating higher returns. So for this time frame, benchmark returns are this, fund returns are this, alpha is this much, and beta is this much, right? So you use this tool to find alpha generating funds. If you like don't have any of these funds in your portfolio, maybe you can rebalance. And another thing that you can do is you can go to mutual funds, and then you can we have a now different, like the way I showed the factor model for stocks, right? You have factor model for mutual funds as well. So if you have any thesis in mind, you can try it out here. So you can add mutual fund related metrics, right? So like you have your own selection framework as well. So let's say you have this up capture to down capture ratio in mind, that when the market goes up, how much upside is captured, when the market goes down, how much downside is captured, right? And higher the better. And then so basically you can add metrics like this. Then standalone performance, average 3-year rolling return you can check, right? We tested the importance of rolling return, so you can check that as well. Then you can check alpha for 3 years, and then select, give the weightage just like the stock factor model. So your primary focus can be on alpha, and then this 25% and this 25%, right? So then you have like top 10 flexicap funds based on this selection. So you can, if I were not holding now, right now I am creating a strategy of my own just based on the three metrics that I saw. But you can dig deep into this, right? And then what you can do is you can find the top funds based on your selection criteria, whatever hypothesis you have in mind, right? And then you can also back test the performance of that basket, and then increase allocation to some of the funds. Because like the question is very subjective, that you want to beat the benchmark and category average against all parameters. Now ideally, if you are beating the benchmark consistently, then it's a good thing, right? And then if you miss one or two parameters, let's say if you are into let's say small cap funds, now if your volatility is better than or higher than category average, but if your returns are way superior compared to the benchmark, right? Then if you are comfortable with higher volatility, then you can do that, or else you can add another factor of volatility. So have an investment framework in mind, test it out, then back test using the strategy builder. Another tool that I showed was alpha analysis for and we also have like the screener as well for mutual fund. So you can uh, like play around with these tools, find out what are the gaps in your portfolio using value, and then try to fill those gaps. And how to use screener and follow daily alert. Yeah, so for screener we have the option when you save it. That's I can show you a pre-saved screener. Like so, this is a screen, slightly advanced screen, because like we have created a new price momentum score screen. So what you can do is you can update screen, and like if you have not saved your screen, you can save. The save button will be here, right? And then you can click like turn on the alerts, and then you select it daily, and at what time you want to get the alert. So in before market 8:45 a.m. or after market at 45 p.m., right? And then you save your screen, so you will be getting you also have the option to select the preference. So on email, push notification, and WhatsApp. Now for WhatsApp, there is a like issue with WhatsApp is that for some users they are not getting alerts on WhatsApp. So what I would recommend is you definitely, if you are using the app, then enable push notification, and on email you will definitely be getting. So every morning or every evening you will get an alert based on your preference. So that's how you screen like save screen and get daily alerts. What information I get from portfolio review? From portfolio review, like if you have any gaps in your portfolio, you will get those information. So what our expert will do is you have your portfolio, he will review the portfolio and showcase where the gaps are. So if let's say a fund has a very poor consistency, even though the returns are good but the consistency is poor, then the expert will highlight that part. If your holdings have higher overlap, then the expert will highlight that part as well. So basically you will get an overall idea of your portfolio health from the portfolio review. So, and it's, if it's not compulsory, if you want to get it reviewed you can, we don't charge for it, right? And if you don't want to get it reviewed, if you want to review on your own, then you, once you connect your mutual funds, you will have a lot more data points to look at, right? So that's it. How often to review performance and when to exit the mutual funds? I think annual review or 6 months review should be okay for mutual funds. There's no point in reviewing every month, right? So 6 month, or an if you are a really long term investor, then annual review should be fine. When to exit, like if the fund consistently like starts underperforming, then you should exit. So for that we have beat percentage in mutual fund portfolio. So when you connect your MF portfolio, you will get the beat percentage as a metric in the table, right? So you can check that as well, like on how many days you're based on the rolling return analysis. So what it will do is, let's say from 1st January 2023 to 1st January 2024, 1 year period will be selected, your like your funds return versus your benchmarks return, right? Then from 2 January 23 to 24, 3 January 23 to 24. So like that, there will be multiple like thousands of periods will be considered, right? 1 year period. And then in those periods, how many times your fund is beating the benchmark, right? So it will show the consistency. If the consistency is very poor of any of your fund, then you can, change, they decide to change. Or else if the fund starts underperforming consistently, so if a small cap fund has a great, like small cap as a asset class, has like small cap stocks rallied in a year, but your fund is underperforming, then you dissect why it has underperformed and then change. Information ratio for each uh, MF available on Sharply tool. Information ratio, I think we have it. So MF screen. Okay, some kind of error. I'm getting an error, so I can show you something else. Mm, for mutual funds, right? So mutual funds magic board. Yeah, and here you have, yeah, we have information ratio for all the funds, right? So you, for all your portfolio holdings, you will be able to find the information ratio for your mutual funds. How to perform dual momentum backtesting in Sharply. If you can specify what dual momentum backtest, like dual momentum is, then we can try to work around it. But like I didn't get the question dual momentum backtesting. If there is a specific kind of like strategy, then you can share the rule with us. If it's possible to create on Sharply, we will. Each of the parameter returns and risk parameter, I want its comparison with category average and benchmark. each of the parameter of return and risk for MF. Yeah, you can category with category average and benchmark. It should be possible. So in value, we will see if we have a table like this, or else what we'll do is uh, we will check if we can add this. If your data is your data accurate, for example, the expense ratio of Bandhan small small cap. Let's check for Bandhan small cap. So we get our data from value research. Expense 22% in his fact sheet, but on. So right now it's 0.47. So we will get in touch with our data provider. I am noting this down. So and we will get it later because recently the like expense ratios definition has been changed and they haven't updated it since. So yeah, then several figure in your data. Several figure in your database vary from Morningstar and ticker tape for same fund, same parameter. And we take our, as I mentioned, we take our data from value research. So ideally, it should not vary. But if you can share the details of those funds, then we can get it verified because there is no other way to verify, or else we have to just check with the fact sheet of the fund. So it's an expense ratio is 47%, it's like 0.47% here. We can download the fact sheet and check. So we will get this sorted and get back to you. You can raise this issue in community as well. Right? So I'll check the form again as well. Yeah, one more question was that like if I'm fine with strategy, then how to trade it in the live market, right? So for that, like we don't have the functionality of directly connect your strategy with a broker so that automatic rebalancing will take place. So instead what you can do is you can put your strategy to paper trade. So as you can see, I have put these strategies to paper trade. As you can see here, paper trade is there, and based on your rebalancing date you will get an update in your portfolio. So if you go to trade logs, like this strategy gets updated every quarter, I guess, right? So on first of every quarter you are getting these updates in the trade logs, and based on these updates you can buy and sell, but you will have to buy and sell manually. The automatic execution will not happen from the strategy, but we have the option to connect your broker with Sharply so that you don't have to jump in. Let's say if I am getting an alert that I need to buy three more shares of Reliance, then we have the option to place order here, and then we have these brokers available with us, so you can connect your broker and you can place your buy and sell order directly from Sharply. So you don't have to jump into the broker app to place your orders, but the full automatic execution, like on every rebalancing date your buy and sell orders will take place automatically. That type of arrangement is not available as of now, right? So that's, I think, it for all the questions. And if you still have any questions, you can go to the community and raise a ticket here, right? So you open the community part and then raise the ticket. So you either start a discussion, or if you have any specific issue on any particular like tool or specific like request on how to select or how to use a particular tool, then you can ask us on the community, right? So I think that's it. Yeah, that's it. I think I've covered all the questions. So that's it for today. Market has been volatile, so good opportunity to go for the long term and have a nice weekend ahead. Thank you.